PCE inflation data released today, March 27, 2026, is set to significantly impact market trends. With rising inflation concerns, investor risk levels are escalating. Here is what every investor needs to know, and exactly how each market sector will be affected. The upcoming PCE inflation data release is a highly anticipated event, with significant implications for the market. As the Federal Reserve's preferred measure of inflation, this data point directly influences rate path decisions at the next FOMC meeting. The PCE index measures the change in prices of goods and services consumed by households, providing a comprehensive picture of inflationary pressures in the economy. The market watches this release closely, as it often has a more pronounced impact on growth and bond-proxy sectors than the more widely followed consumer price index. The current consensus expectation is for a moderate increase in the PCE index, but given the elevated uncertainty in the market, as reflected by a VIX of 26.8, any deviation from this expectation could have a pronounced impact. Historically, a beat versus miss in the PCE inflation data has typically led to significant market movements, with a beat often resulting in a strengthening of the dollar, a rise in bond yields, and a corresponding decline in gold prices, while a miss has led to the opposite outcome. Equities, particularly those in growth and bond proxy sectors, have also been known to be highly sensitive to this release. The historical volatility pattern around this release has been notable, with markets often experiencing significant price movements in the aftermath. Given the current macro environment, characterized by elevated uncertainty, this particular release is especially significant. As investors, it is essential to understand the potential implications of this release and position accordingly, keeping in mind that this is educational content and not financial advice. A thorough analysis of the PCE inflation data, in conjunction with other market indicators, can provide valuable insights into the direction of the market and inform strategic investment decisions. Technology companies are closely tied to the PCE inflation data, particularly the core inflation reading, which affects their bottom line and demand for their products. With companies like Apple, MSFT, and Nvidia closely watched, a strong print could be bearish for the sector, as it may lead to higher interest rates, which would increase borrowing costs and potentially slow down growth. Healthcare companies are closely tied to the PCE inflation data, particularly the medical care services component, which affects pricing power for companies like Johnson & Johnson, UNH, and PFE. A strong print could be bearish for the sector, as it may lead to increased regulatory scrutiny and pricing pressure following the release. One key thing to watch is how hospital operators and pharmaceutical companies adjust their pricing strategies. Financials: the upcoming PCE inflation data release is crucial, particularly the core inflation reading, as it directly impacts interest rates and thus net interest margins for banks like JP Morgan, BIS, and GS. A strong print is bearish for the sector, so investors should watch how banks' net interest income is affected following the release. Energy sector dynamics are heavily influenced by PCE inflation data, particularly the core personal consumption expenditures price index, as it impacts oil, gas, and renewable energy demand, and subsequently affects companies like XOM-CVX and COP. A strong print could be bearish for the sector, as it may lead to higher interest rates, so investors should watch energy infrastructure spending following the release for insight into sector trends. Consumer sector companies, such as Amazon and HD, tend to be sensitive to PCE inflation data, particularly the core reading, which directly impacts consumer spending power, a key driver of their sales, and a strong print could be bearish for these names, while a weak print could be bullish. And following the release, watch for changes in discretionary spending trends, especially in areas like travel and luxury goods. Industrials: the PCE inflation data's impact is closely tied to the sector's pricing power, specifically the ability of companies like CAT, HON, and UPS to pass on rising costs to customers. A strong print could be bearish for the sector, as it may lead to increased costs and reduced demand, so watch for any signs of margin compression following the release, as this will be key to understanding the data's true impact. Materials companies are closely tied to the trajectory of inflation, particularly the PCE inflation data, which can significantly impact their input costs and pricing power, with a strong print likely being bearish for the sector, as seen in the potential impact on companies like LAN, SHW, and FCX, so it is crucial to monitor the inflation expectations component following the release for insight into the sector's near-term prospects. Utilities typically experience a significant impact from PCE inflation data, particularly the core PCE index, as it influences interest rates and thus borrowing costs for these capital-intensive companies. Consider names like NI, DUK. So, a strong print is generally bearish for the sector due to potential rate hikes, so investors should watch for shifts in dividend yields following the release. Real estate investors closely watch PCE inflation data, particularly the core reading, as it influences interest rates, and thus, borrowing costs, affecting REITs like PLD, AMT, and EQIX, as well as commercial real estate and home builders. A strong print is bearish for this sector, so a weak reading is more bullish. Crypto investors closely watch PCE inflation data, particularly the core reading, as it impacts monetary policy and risk appetite, with a strong print potentially bearish for assets like BTC, ETH, and SOL, as it may lead to tighter financial conditions, while a weak print could be bullish, and following the release, it is essential to monitor the Bitcoin price action. Commodities, particularly those tracking gold and oil, tend to react to PCE inflation data, with the core inflation rate being a key focus, as a strong print could boost gold via the GLD and weaken oil via the USO, while a weak print may have the opposite effect. And following the release, watch the movement of silver via the SLV for a potential leading indicator of the sector's direction. Forex is highly sensitive to PCE inflation data, particularly the core reading, as it influences the US dollar's value. A strong print is generally bullish for the DXY, bearish for euro to US dollar and pound sterling to US dollar, while a weak print has the opposite effect. The key aspect to watch is the market's reaction to the data, specifically how it impacts the DXY, as this will dictate the trend for major currency pairs. As PCE inflation data approaches, trade with discipline and awareness. Remember, this is educational content, not financial advice. Like, subscribe to Financial Market Oracle, and comment what you're watching. The data is coming, be prepared, stay profitable. This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.